Thank you very much, Dr. Nuh, and thank you, Mr. Amgad, for having us today. We're honored to be here and presenting the achievements we have done so far with our economic program. It's indeed a very interesting time to be presenting the Egyptian government's endeavors to enhance economic freedom. The Egyptian economy is now at a juncture where we have completed successfully the first phase of the macroeconomic stabilization. And we are now transitioning into a second phase of the reform program, where we will be focusing on unleashing the potential of the Egyptian economy while enhancing economic freedoms and achieving a sustainable, inclusive, and private sector-led growth. So this is what I'm going to be discussing in the first and second section of the presentation. The third section is going to be more forward-looking and focusing on the medium term and our targets going forward. The past 18 months have been really historic for the Egyptian economy, and this is in light of some key unprecedented reforms which came in light of commitment to achieve a great magnitude, size, and pace of reforms. Just to name a few, the Egyptian pound was floated in November 2016, and this has eliminated market distortions, stabilized the FX regime, and increased the availability of FX in the market. We have improving fiscal health indicators in light of a couple of reforms, chief of which is the subsidy reform program we have implemented during the past 12 months, 2 rounds of electricity price movements, 2 rounds of fuel price movements, the introduction of the VAT, the raise of the VAT rate from 13 to 14%, and a continued control of the wage bill. The IMF program is in place. It's progressing very well. We've completed the second review, and we're expecting the third review next month. The business environment is also improving, and I'll be going into detail into this pillar later in my presentation. And this has all allowed us to return to the bond market. During the past fiscal year ending July 2017, we have issued 7 billion of euro bonds which were 3 times oversubscribed. This fiscal year, we have issued so far $4 billion, and just last week, we have issued for the first time euro-denominated euro bonds, and they were also 3 times oversubscribed. So really, this combination of a successful shift to a floating exchange rate regime, improved energy supplies, a reversal in the fiscal trends from a primary deficit of 5% in the year 2012-2013 to a targeted primary surplus for the first time in a decade of 0.2% of GDP. Global recognition of reform with the disbursements of the IMF loan, the completion of the World Bank and African Development Bank development policy loan, and a support from the G7 countries as well. Together with the improving business confidence, are all allowing the Egyptian recovery to take root, with growth expected to exceed the 6% over the medium term and to remain sustainable at the 6% and even further going forward. Indeed, in the first half of this fiscal year, which ended July-December, we have a 5.3% real growth. But the interesting part about this growth is not the number, the 5.3, but its structure is also very interesting to observe, that we have private investments up from being a drag on growth of negative 1.2% in the year 2013 to contributing positively in the year ending June 2016, contributing by 2.3%. So the structure of growth is moving less from a consumption-led growth to an investment-led growth. The Egyptian economy also continues to be highly diversified. We have almost all sectors in the economy are growing positively after having a negative growth in some of the key sectors, such as the natural gas sector and manufacturing sector. After the flotation, these sectors are all contributing positively to real growth. This is together helping to create jobs, and although unemployment rates remain to be high, we are very much welcoming the development that unemployment rate continues to steadily decline. The latest reading is 11.3 in December 2017. And this is coming down from around 13% 2 years ago. So the shift to a floating exchange rate regime is boosting the competitiveness of the Egyptian economy. We have the new export index passing the 50 mark in the PMI threshold. We have the current account balance as well. It's expected to decrease by half in 2 years only. So we expect to end this year with a current account balance of 10 billion, balance of negative 10 billion. And this is in light of year-over-year non-oil exports increasing remarkably. At the same time, global demand further supports recovery prospects for Egyptian services, such as the Suez Canal and the gradual recovery in our tourism sector. On the external balances side, we can also observe reduction in our external imbalances. The foreign holdings of domestic securities has increased over 1 year from around 0.8 billion to 21 billion. So this shows the regaining confidence in the globally. And foreign direct investments is slowly improving. We are targeting around 10 to 12 billion this fiscal year. And this is all translating into improvements in the external balance sheet, where we have the net international reserves increasing from around 14 billion in September 2016 to 42 billion just last month. So if we even look at the gross external debt as percent of our FX reserves, the ratio has improved very significantly over the past year from 320 to 220. All these efforts are very much helped by the prudent oversight by the Central Bank of Egypt, which contains pressures on inflation. The strong policy stance and the lower pass-through is helping rein in inflation and enhance price stability. So inflation has peaked at around 30% around a year ago. This, just in February, we had around 15% inflation. So the worst is behind us in terms of price instability. And this is all in light of the monetary policy shifting from an exchange rate targeting to an inflation rate targeting regime. The central bank has announced that over the next year, in 2019, the inflation target is a single-digit inflation. The banking sector remains highly resilient and continues to support the economy. So the NPL ratios have been dropping to around 5.8%. And the capitalization ratio stands stable at 14%. And at the same time, the loans to the private sector have increased just this past year by 25%, which further supports the idea that the government is no longer crowding out the private sector in light of these very ambitious reforms on the fiscal side. Fiscal consolidation, the first 8 months of this fiscal year from July to Feb, we've seen the primary deficit dropping to its lowest rate in 10 years. So from around 1% 2 years ago to 0.3% deficit, primary deficit. Overall deficit is also showing some very promising trends. And in general, the revenue growth continues to outpace the growth in expenditure in light of a very comprehensive reform to the tax administration, tax collection, and at the same time, control of our government spending. So this was all the growth essentials. These were all the essentials that will allow us to achieve the macroeconomic stabilization beyond which we cannot move beyond which we would achieve high sustainable growth. So the growth essentials are now put in place. We have a broad-based political stability. We have an elimination of FX shortages, elimination of electricity shortages, stability and resilience of the financial sector. These were the essentials. The drivers moving forward will be the enhanced competitiveness of the FX in light of FX liberalization, improvement in corporate governance through the IPO program, the liberalization of the oil and gas sector, natural gas discoveries, and more, which I will be discussing now. So the power sector dynamics are very interesting. We're seeing them improving, and they're providing a bedrock for future growth. Previously, the power shortages were a main drag on growth. Currently, Egypt is expected to become a net exporter of natural gas in 2018. The power capacity increased in almost 1 year by more than 50%. And we are resolving all our arrears due to the international oil companies, which have dropped our balance up from 5.9 to around 1.1 billion. We have an improving business environment as well. There are a couple of institutional enhancements together with some landmark legislations which were all passed last year. The institutional enhancement, just briefly because I know I'll have to wrap up soon, is the establishment of the Investor Services Center, which is a center that streamlines all the procedures for investors, unified agency for SME development, establishment of a governance unit to follow up on all the projects that are currently in place, and an IPO program for state-owned enterprise. The legislation, perhaps the biggest and milestone legislation, is the new investment law. The new investment law strengthens the guarantees to investors, such as the enforcement of contracts, the protection of investment projects, the ability to freely transfer and repatriate profits at any time. So if you look at just the paid-in capital, for example, in October 2016, it was 38 million Egyptian pounds. In October 2017, it was 534 million Egyptian pounds. While the number remains low, we look at the trend itself, which is more than 1,000% increase in just 1 year. Our progress has also been recognized with a 15-point increase in global competitiveness ranking. So we increased from around 100, the overall ranking increased from from 108 to around 73 in the quality of infrastructure and other variables. In terms of the Economic Freedom Index, where the government is cognizant of its low rate on this index, but the low ranking reflects two things. It reflects some constraints in the economy, which we are very much targeting in our reform program, and I'll be discussing them now. But it also reflects some lag in the methodology itself in capturing the amount and magnitude of reforms that have been implemented over the past 2 years. So in terms of investment freedom, for example, there is an amendment to the companies law, which establishes, grants the ability to establish a limited liability company with only one person, with a separate legal entity protecting personal assets. The railway law and the feed-in tariff program, both opening the market for the private sector for the first time. IPO program, the government announced 23 companies in the first phase at a market value of 430 billion, and we will be divesting stake between 15 to 30% of these companies. The Industrial Land and Licensing Act, another landmark act, because it merges all the authorities involved in granting a license, industrial license, from 11 to just one authority, and it shortens the issuance of licenses from months down to just 7 days for 80% of the activities. In terms of trade freedom, we are resolving non-trade barriers, such as the promotion of usage of electronic system and the reduction in number of products required to export from 9 to 5 and to import from 11 to 6 during 2017. This has also significantly lowered the time needed to export and import. In terms of financial freedom, we are deepening the market through the capital market law and establishing an electronic collateral registry through the movable capital law. For the business freedoms, we finally have an efficient bankruptcy law that allows the liquidation period for a non-viable company to bring it down to 9 months, up from more than 2 years. The natural gas law opens the market for the first time for the private sector, and the simplification of procedures for paying taxes. We see just last month the declaration that needs to be filled for the corporate income tax is the number of pages was reduced from 14 to 7 pages, and the personal income tax reduced from 36 to 10 pages. These are just a few examples. Due to in the interest of time, I will not dwell further in the business freedom, but just finally, in the government integrity, we have a new procurement law that increases the private sector access to government procurement information and strengthens the complaint mechanism in this regard. And then the Open Budget Index. In January 2018, we witnessed the largest improvement in the last 6 years, with Egypt ranking up from 89 down to 65, or up to 65, which is also a very a welcome development. And in light of the transparency of issuing more publications, a citizen budget, a pre-budget statement, a budget statement, and the like. Going forward, so for the medium term, we have a well-structured pro-growth fiscal consolidation path. The fiscal deficit is targeted to be cut by half by 2021, and the anchor in the IMF program is the primary deficit, or the primary balance. The target is a 5.5% consolidation on the primary balance, from 3.5% deficit last year to a 2% balance going forward. This year, we're targeting a marginal deficit for the first time in decades. Debt is going to accordingly also reduce going forward to around 81% of GDP. And expenditure control will continue to be strong while improving tax collection and diversifying the revenue base. Okay. Just a few final points on the expenditure side. We have enhanced expenditure control going forward will enable us to reduce the debt and deficit. We're moving towards strategic budgeting, towards top-down budgeting and expenditure ceilings for the first time this fiscal year. We will continue to implement the fuel and electricity price adjustments the coming 18-19 as well, in the budget for 18-19. Containment of the wage bill will continue, and all these freed up resources will be channeled into better targeted social spending. Finally, we have strong global demand for Egyptian assets to support our financing strategy. So just if we look at the Eurobond yields, we have yields quite improving just over the past year, with a differential reaching 0.9 percentage points, which is a very welcome sign of enhanced investor confidence globally. The EGX index is also showing a very positive trend during the past year, and this is in light of improved foreign demand for Egyptian assets in the EGX, in the Egyptian exchange, reducing the private sector crowding out. Thank you.
Thank you.